Mr. Farage, it's a pleasure to have you with us.
Thank you.
So many people in America and around the world, especially in the States, have gotten to know you through videos and clips on the Fox and all the different networks. But what I love about the Real Vision Long program is really getting to know, having our investors globally getting to know a person like yourself in a deeper, more personal format. Just bring us back to your days. And many people don't understand things about your past and what the evolution of your ideas, your former years in finance, for example.
Yeah, I mean, my first job, 1st of September 1982, working for Drexel Burnham Lambert, and Drexel had just bought an old firm of London Metal Exchange brokers in London. And that was my first job. So I spent 5 years working at Drexel. I then spent 5 or 6 years at Credit Lyonnais, which then was a state-owned French bank. It wasn't for me. There was a parting of the ways with that one. Then I spent 9 years working for Revco, the Chicago-based FCO.
The future shop.
Absolutely, and that was a great place to work. It ended badly for them, but it was a great place to work. So most of my life, most of my business life, was involved with base metals, copper, aluminium, as we say, aluminum, as you say, nickel, tin, zinc, lead, but also I did a fair bit of currency trading as well during those years. So I spent some time as a broker, but also some time as a market maker. So yeah, I mean, my life was the city. My life was financial markets. I loved it, but politics kind of took over.
How do you make that switch? I mean, it's so hard. You're 20,000 feet deep in finance.
Yeah.
You're in your 20s, 30s.
Yeah.
And, first of all, what inspired you to make that risk? Because one of the things that I look at is the risk of taking that jump to that next field.
Well, it is a big risk because, I mean, the truth of it is, the public think that politicians are incredibly well paid. They're not. They're really not. Yeah. So actually, for me, doing it was a huge financial hit. But it kind of occurred because in about 86, 87, we had something developed called the single European market. And the idea was that across the whole of Europe, there would be exactly the same rules, the same regulations, the creation of an economic isotopic plane, and that somehow this would be good for business. And I thought, well, actually, as a trader, I don't want things to be the same. I like differences. I like competition. I think that individual governments should be able to set their own tax levels, their own employment levels. So as a free marketeer, I was instinctively concerned about it. But also, when the phone rang, it could easily be Frankfurt or Paris, but probably it's more likely to be Santiago or Singapore. It was a global business. Yeah. So I, from an economic perspective, I thought, what are we doing getting ourselves so closely tied to the European economic model, given the fact there's a big world out there? And then politically, I began to realize in the early 90s that the common market, as we called it, was actually about the creation of a new state. They wanted to build a United States of Europe. They just didn't want to tell anybody about it.
And what is the common market to the average viewer? Well,
the common market was the concept, basically, of a free trade zone, where you don't have quota, where you don't have tariff. And that's how the European project was sold to my parents' generation.
I see.
What's not to like?
Free trade zone, no tariffs.
Absolutely, absolutely. But it was clear by the 90s, it was becoming so much more. And for me, the biggest moment of the lot was October 1990, 5:15, in the pub opposite the London Metal Exchange, which is what traders tend to do after the day of work. And somebody came in and said, we've just joined the exchange rate mechanism. And the exchange rate mechanism was a means of pegging sterling against a basket of European currencies, but of course the Deutschmark clearly being the heaviest by weighting. And we were doing this because the British government wanted us to join what became the euro. And I remember that night saying, this is cretinous, we're making a huge mistake, it won't work. And by 1992, we finished up with interest rates being double what they should have been, record bankruptcies, record house repossessions. And I thought, you know what? I was right about that. And if I was right about that, maybe I'm right about others. And it was me saying to myself, I don't get this, but seeing virtually every national newspaper, virtually every employers' federation, every trade union, every political party saying it was the right thing to do. And there was I screaming that it wasn't. And that kind of inspired me. I thought, well, if I've got that right, maybe I should give politics a go.
And you start the UKIP.
Yeah.
The most lonely, I just picture this empty meadow with you out there. And now this meadow has become a field filled with people. I mean,
Yeah.
what were your first steps to create the union? What's that? The United Kingdom Independence Movement or party?
Yeah, party. Well, I mean, it was. I began to, because of the way I was feeling about this European project, I began to write letters myself to the national newspapers and start getting published and doing things like that. And before long, I discovered a group of people who felt very much the same, mostly academics. They were mostly people from academia, not from business. I have to say that most of my friends, family, business colleagues, they just thought I'd gone nuts. I think they sort of thought I'd smoked something funny. What was I doing launching this crusade? But when you work in financial markets, you've got to be prepared to admit you're wrong, often several times in one day. And I've always been prepared to admit I'm wrong in life. And yet, somehow, right back to the early 90s, I just knew this was the right thing to do. And I just knew I had to do it. Is it a calling? I don't quite know what it is, but I just believed that I wanted to do this. And I kind of knew that the gut instinct feelings I had about the European project, about the loss of democracy, about the loss of sovereignty, I somehow knew that at some point it would reach a wide audience. What I didn't know was quite how long it would take me.
And if you think of the viewers of Real Vision and around the world watching us right now, what's the one thing that people don't really understand about you?
Well, I think it's very easy when you're a figure that is against the establishment. It's quite easy, given the tidal wave of abuse and criticism that you get, for people to form an impression that somehow the things that I fought for were extreme or hard right or, all these things that got said. And I guess I don't let much upset me, because you couldn't survive in this business if you did. But I think those that get the impression that somehow, because you want your sovereignty, because you believe in sensible immigration controls, that somehow this is some sort of extreme neo-fascist tendency, I think that's the one thing that probably does actually upset me, when people form that impression. Look, I was a member of the Conservative Party. That is my biggest sin that I've really committed as an adult. And I was a big advocate of Thatcher, of Reagan. I believe in capitalism. I believe in free markets. Nothing extreme about it. But this is what happens all through history. You get an establishment consensus forms around a status quo position, and anybody that comes and attacks it, whether it's in science or business or politics, is denigrated as being mad and bad.
And what do you say to that middle class person in the UK, runs a small business that has relationships throughout Europe, and that the hard Brexit would disrupt that family and that family vision in the short haul? What do you say to that person?
Well, the first point to make is that doesn't have to be the case.
Okay.
The GATT Treaty has been around a very long time. Article 24 of the GATT Treaty means that we could go to the WTO.
That's the World Trade Organization.
Yep, in Geneva.
So the UK can go to the WTO.
Yeah, and the EU would need to as well. And we could leave on March 29th at 11 p.m. UK time. And under Article 24 of GATT, we would have a minimum period of 2 years during which we could negotiate a new trade agreement. During that 2 years...
So a 2-year kind of timeout period or integration period?
Basically, for 2 years, nothing would change. We would continue on the current trading terms of that 2-year period. So it doesn't have to be a hard landing Brexit. There is actually a very sensible, very, very easy way out. But even if we did leave with a bumpy landing and with tariff, that'd be quite tough for lamb producers, whiskey producers. On manufactured goods, it'd make almost no difference. Tariffs on manufactured goods are about 2 or 3%. It's less than the weekly currency move. So there's a lot of nonsense talked about many things like that. But I would say this to them. The word that has disappeared from our political narrative in the UK is competitive. We've been so used to, over the course of 40 years, to harmonising our regulations, homogenising our regulations, I mean, pasteurising everything. I mean, it's all become the same. And actually, breaking free of the European club gives us a chance to diverge over time and to be more competitive in terms of regulation. I mean, think of the City of London. Think of MiFID II. The massive cost.
MiFID II is this new, it's kind of like your version of Dodd-Frank.
Yes, that's right. That's right.
So it's a financial regulation system that comes from the European Union.
Comes from the European Union.
And it impacts the banking system in London.
It massively impacts the brokers, dealers and traders in London. It doesn't actually protect anybody. It just makes London, it makes Europe a much more expensive place to do business. You know, I keep hearing this argument because of what Goldman Sachs say or JP Morgan says, that, the City of London is in favour of the European Union. Well, it's not really. You know, the big firms might like it because they get a chance to write their own rule book, and it might hurt them a little bit, but it hurts their competitors even more. But we've seen over the last 10 years, at least 80,000 jobs leaving financial services in London, going, insurance going to Bermuda, hedge funds leaving, going to Geneva, Zurich, Singapore. Actually, we're making London a difficult place to do business. I've got several friends of mine who,
and that's not necessarily the independence movement created. That's more from MiFID. That's your point.
MiFID's one example of it.
Yeah.
But I've got friends who now have set up businesses in New York. It's much easier now to do business in New York than it is to do it in London. The truth of it is that both the French and the Germans have never understood the Anglo-Saxon market system that New York and London. In fact, they actually hate it. They do. They hate it. And so I think being outside of that common rule book, phenomenal opportunity for London, which is after all a very international city anyway. So I see a great future. And anyway, given that financial services is Britain's biggest business, shouldn't we be in control of the rules, not somebody else?
So you're spending more time in the United States. You're on the speaking tour here. You're working with financial institutions. You're more, I think, an advisor now to some U.S. investors because of this movement. How is that working, and your relationship with the president?
I mean, clearly, the president being a friend makes a big difference because everyone wants to know what's he really like. I mean, that's what they want to know above everything else. But yeah, I mean, look. All of business here, particularly in the finance business, is fascinated. What's going to happen to the euro? What's going to happen to the European project? And one of the reasons they want to hear from me, and I speak at client breakfasts or whatever it may be, one of the reasons they want to hear from me is I've got quite good form on this. I've made some big calls that have turned out to be right. I mean, Brexit and Trump was a win double, that happened back in 2016. But also, people need to understand that what's going on here is there's a giant battle going on here in politics across the entire Western world. It's globalism versus nationalism. And actually the European Union is, if you like, the prototype for the globalists of the new world order. I'm not being a conspiracy theorist here, but they want to create a new world order. And if Hillary had won the presidency, she'd already talked on Wall Street about America becoming part of a hemispheric European single market. So people are very keen to know, what do I think is going to happen? And I'm happy to tell them.
Well, our Bear Traps report clients have mentioned the most impressive thing in the last year is most people thought that your politics would overrule your financial opinions. But in the last year, we've seen you make some profound, in December, I mean, you really took the May appeasement process to heart, and you thought that this would play out, in other words, in an extended way. In other words, more bullish for the pound.
Yeah, I was arguing, as you say, before Christmas, I was talking against my own political book, but I was arguing that the short-term fears that the currency markets and equity markets have of us leaving with no deal, of us returning to it.
And that peaked around December 15th.
Yeah, it did. Yeah. It did. And I was saying very publicly, actually, in reality, I think what will happen is the can will get kicked down the road. I don't think Parliament's got the heart or the will at this moment in time to deliver the Brexit that people voted for. So yeah, I've been arguing since Christmas that extension is the most likely thing, and that actually the short-term effect on the markets is mildly bullish for both the pound and UK equities.
And you've had the Corbyn risk for the pound and for the UK credit rating. That seems to have gone. So I think the Corbyn risk peaked in June, July.
In June last year, Corbyn was running at about 40%.
And let's bring back, he's the head of the Labour Party in the UK.
He is the hard left leader of the Labour Party.
Most hostile to bondholders and creditors, potentially down the road.
Absolutely. I mean, this is, the Labour Party has its socialist roots, of course, but this is by far the most left-wing leader the Labour Party's ever had. And indeed, the whole party's been taken over by hard left activists. And I look sometimes at what's happening to the Democrats in this country. I see slightly the same tendency beginning to occur. So people were terrified that a Corbyn government, would mean basically capital flight, like we had back in the 1970s. I think what's happened since June is his position is so extreme. He has brought with him a group of people whose hostility to the existence of Israel actually spills over into just plain outright anti-Semitism. And that's something Middle England doesn't like. Yeah, Middle England, decent people, they don't want to be associated with that kind of thing. So you've now got a fragmentation, a splinter. 9 Labour MPs so far have resigned from the party.
So this is a splinter within the Labour Party.
Yeah, 9 of them have left. And they've left for 3 reasons. 1, the tinge of anti-Semitism. 2, that it's so extreme now on the left that actually a sort of moderate socialist, social democrat doesn't feel comfortable. And 3, of course, because of the European position. And the ones that have left are the outright, we must have a second referendum, we must stop Brexit from happening. But either way, the Labour vote is split down the middle. Of the 12 million votes that Corbyn got in the 2017 general election, 5 million of those had voted Brexit the year before. So you've got the Labour Party split on Brexit, and equally the Conservative Party split as well. British politics can't cope with Brexit. But the point is, that splinter has, even though it's only just more than a handful of them, he's now in the polls down at 25, 26%. And I think the threat of a Corbyn government has diminished hugely. And that's very good news for investors and good news for business.
Okay, so let's talk about actionable catalysts for investors watching us over the next 2 months. So February 27th, we have a parliamentary vote, and then we have the EU summit.
EU summit
and that's in early March?
21st, 2nd of March.
And then we have the parliamentary elections. Walk us through what investors watching us right now, those catalysts and the way those catalysts are going to swing market sentiment.
27th of February is the next time the government will put they call it a neutral motion before the House of Commons. But basically they bring Parliament up to date with how the negotiations are going with those lovely people like Monsieur Barnier and Mr. Juncker.
So Miss May goes around Europe, kind of gets a flavor of the deal that she can put together, and then she brings it back to Parliament.
Mrs. May goes to Europe and begs before unelected bureaucrats in Brussels and asks for concessions. I just find the whole thing humiliating, but hey. So whether on the 27th the anti-Brexit MPs strike or whether they wait remains to be seen. But there was an amendment, the Cooper-Bowles amendment, that didn't pass in Parliament last time. But what it basically says is that if no deal can be agreed, Article 50 should be extended. The can should be kicked down the road.
What does that mean for the markets? Article
Well,
50 extended.
it means no change. It means no change.
That's why I think there's a relief rally.
So there will be a little bit of a rally if that happens, although it won't be a big one. Because, of course, one thing businesses and investors do want is some certainty of where we're going with this.
Sure.
If you kick the can down the road for a year, well, what's to stop you kicking it down the road for another year? What's to stop maybe momentum for a second referendum?
So
into that
companies, CFOs, treasurers can't make those capital expenditure decisions.
Everywhere I go, Larry, people in business say, look, whatever the deal is, just give it to us. Just tell us. just give me the cards, and then we can start to play the game. So that is a problem. So 27th of February could be a big day. 13th, 14th of March will be massive in the UK Parliament because that'll be the last big debate before she goes off on the 21st of March to Brussels, to the summit where, the 28 presidents and prime
That's where
ministers.
she'll probably get the final offer from the EU.
I would think so. But if she does get a final offer then, that would only give us 7 days for parliamentary ratification.
How is that going to? I don't understand.
And don't forget that after Parliament deals with this, the European Parliament has the final say. So the final vote is actually going to be in Brussels or Strasbourg, and I, of course, will be a part of that. So for all these reasons, you can see why extension looks more and more likely. The deal that she's negotiated is arguably, from a political point of view, even worse than EU membership. But at least with EU membership, we could trigger Article 50 and give an intention to leave. With the withdrawal agreement, we could be stuck in it in perpetuity. So she's not handled this at all well.
I really want to understand the European elections.
Yeah.
Populists have obviously, the movement AFD in Germany, Liga, Five Star in Italy, even Vox now in Spain.
Yep.
These are all populist parties that have gone from, as you've explained, I saw you speak at an event, a banking event, where you said Liga and Salvini were 1%, 2%, 3% of the vote 10 years ago. And where are they now? Explain that, that impact on the parliamentary
I mean, they're up in the 30s now.
In the 30s?
It's remarkable.
And this is Italy, Liga.
When you think about Italian governments, what do they have? I think 51 governments in the first 50 years after World War II. I mean, chaos is the norm in Italian politics. And governments come in and governments go. This government, this merger that has happened between Five Star, who are, on the left, the Liga, who are on the right, their approval ratings are up in the 60s.
Together.
Yep, together, and it's working. And
so this would be like in America, a Bernie Sanders party and a Trump party together?
In many ways it would be. Yeah, in many ways it would be.
But it's just fascinating to an American to think.
But it's working. They're clearly on a collision course.
Because one group wants
Brussels.
to spend, and one group wants to cut taxes. So how is that?
Yeah, that's difficult.
Sustainable financially?
Coalition forces compromise, obviously. But they presented a budget, their annual budget, with a deficit running at about 2.4%. And all right, I know some of the future projections were a little bit optimistic for growth, but it wasn't by any means an outrageous budget, particularly given the French.
After, the expectations were, I think, 4 or 5%.
That's right. And they came in with 2.4. I thought it was relatively responsible. And yet, the European Commission, and I repeat the point, men and women who we can't vote for, men and women who we can't remove, people who have power without accountability, rejected the Italian budget and made them cut it. And I think these European elections, particularly in Italy, are effectively going to be a virility test of Italian political parties against that amount of power
So you
being
have
in
the EU,
Brussels.
you have Brussels, the EU Parliament, and net, a larger percentage of populists will be in that government.
Look, when I was first elected to the European Parliament in 1999, I was the only secessionist in the place. Literally, I was one out of 600 and something. And I was the only person really there saying we shouldn't be part of this. It's going to be very different. I think there's going to be a big move. I would guess that we're going to finish up with, I would think 25% of the Parliament, maybe nearer 30, will be new MEPs with a pretty robustly sceptical attitude towards the way the European Union works. Doesn't mean they'll be outright secessionists, but it means they will be Euro-critical in many, many ways. And kind of what I think we're going to see happening is, I think the discipline that keeps the Eurozone together, and that combination of ECB, at times IMF, and certainly European Commission, that discipline that tells countries what they must and must not do, that's going to fragment. That's going to start breaking down.
So you had Miss Angela Merkel, incredible leader through, obviously, 2010, 11, through the last 8, 9, I think a decade almost. She was the glue of Europe. And what you're describing as a more fragmented power base throughout Europe?
Well, she's going.
Yeah, she's gone.
She's going. Amazing, isn't it? Glittering political career ruined by one mistake.
Yeah.
That one phrase, let them come, as many as want to come, and it's ruined her.
Immigration. So
It's ruined her career.
So a lot of people here in the States think that if she had taken, if Europe had handled this immigration issue over, say, a decade and didn't try to jam it down everyone's throat, is that your argument? Is that's what?
Well, I think that if you bring in, huge numbers of people in a very short space of time, nearly all of whom are young males, aged between 20 and 30, and who come from countries where women aren't even second-class citizens, don't be surprised that there are huge, huge cultural uproar going on in German cities and elsewhere. So it was a huge, huge mistake that she made. Either way, if you think back to 2008 and on, it was actually Merkel's leadership in many ways that kept the Eurozone functioning and kept the whole thing working. Her political authority, the sheer weight of Germany as an economic power, kept the whole show on the road. She's on the way out. Very unlikely that she's going to be replaced by anybody with that level of stature that she has.
So this is important. So you think of the relationship between Germany and think of Schäuble, the former finance minister.
Yeah.
You've had this group of people that were very hard on austerity, really forcing the austerity into the periphery, which Italy, Spain, Portugal. Could we see a left shift there where they're actually more supportive of deficit spending in the South? Could that somehow be a positive coming out of Germany?
Well,
that's a major.
They might, but it won't be enough. The Greeks had their little mini rebellion. They put Mr. Tsipras in power. They had the rather colourful finance minister, Mr. Varoufakis, for a bit. But in the end, when it came to the standoff between the Greek government and the European institutions, the Greeks blinked, and the Greeks have now just given up, basically. Italy is a very different kettle of fish. I think what you're beginning to see with Salvini is a series of tests of will that are going on between him and the European institutions. And at some point...
It's now going after the ECB. They're taking
the
Trump playbook.
Absolutely. Well, I'd rather agree with Trump on that one, actually. But yeah, and so what I see discipline breaking down within the Eurozone. I think it becomes much harder for the ECB, the Commission, and Germany to limit what governments borrow and what they spend.
So it'd be much harder for the EU to enforce financial discipline.
Much harder.
So you have credit default swaps on Italian sovereign bonds that have gone up dramatically as of the famous Memorial Day weekend.
Yeah.
God bless Brevin Howard. They got it right.
They had a good run.
But now what's interesting is that even as markets have rallied here in the United States, you still have those credit default swaps that which is actually a bet on default. The cost of protection is still very, very elevated among Italy and the banks. So you're talking about 1.8 trillion of near-term debt maturities in Italy. Yeah. So these are bonds that are coming due that at the same time they're running the deficit and they're having this confrontation. So we're talking about near-term paper coming due in the next 3-4 years, maybe 5. So your near-term debt maturities are extremely high, 1.8 trillion.
Massive.
How do we get through this? Where does it break? Does it break sometime in the next 18 months?
Well, in the end, of course, that's the one thing that they have over Salvini, is the worry that if they rebel too much, the whole system could go bang. That is the one thing that perhaps holds the Italians back from being too rebellious. But ultimately, in the end, this is about public will. And we've seen it with Brexit. I mean, we were told in that referendum that if we voted to leave, 500,000 jobs would go immediately. Growth would collapse. House prices would collapse. Plagues of black locusts would descend upon our farmlands. And we still voted Brexit. And you get to a point where even if you tell the Italian electorate, if you start to pursue a path of basically looking at alternatives to the euro, which is what we're talking about, really, that terrible things will happen to you. Well, in the end, people who haven't got anything have nothing to lose. And I think ultimately that's where we're going.
And financial markets have to deal with these different headlines. So you'll have the finance minister, the EU, Mr. Conte, the EU kind of relationship person. Explain how these different headlines come out. One comment says, okay, they're potentially open to leave the European Union. Then a couple of days later, Salvini has to come back and walk that back. Explain what's really happening behind the scenes there.
Well, the confusion, of course, is that you've got this coalition of Lega and the Five Star, but there's also a Prime Minister, Mr. Conte. And I was with him a couple of weeks ago.
And he is more of a...
he's pro-EU.
Yeah, so you have an EU Prime Minister.
You have an EU Prime Minister.
And a populist government.
I know. Look, it's Italy, you know. I mean, it's just different. But don't doubt the changes, the trends in public sentiment. I mean, even in France, polling last week, 40% of French want to leave the European Union. Now, I'm not predicting this whole thing's going to collapse in short order. What I am predicting is we're going to go through years of huge battles going on between governments wanting to make their own sovereign decisions and central bankers and Euro politicians trying to prevent them from doing it. But the trend is very, very clear. The trend is very, very clear, whether it's on budget deficits, whether it's on sharing Germany's migrant quotas with the Hungarians and the Poles and many countries like that. You know, what you're actually seeing is public opinion moving in completely the opposite direction to Brussels. And here's the interesting thing. The growth of Eurosceptic movements or populist movements, I don't like that word because it's used in a pejorative sense, but the growth of all of this has happened during a period of relatively benign economics.
That's a very important point.
All right, and this is the clue. This really is the clue to the future.
So we've had a populist rise with Mr. Draghi has fired $4.7 trillion
absolutely
of bond purchase, asset purchase.
And that's not going to continue.
So that $4.7 trillion should have helped contain populism.
Hasn't done it. So that program is coming very much to an end.
So walk us through that. So we have Mr. Draghi leaving. This is Mr. Everything It Takes from June 2012. Right. Which was the big moment when you had financial markets reversed the positive side. Yeah. And he's, like I said, he's accumulated $4.7 trillion of bonds and assets, all kinds of, even some corporate debt. He owns some junk bonds as well now. You may not have a strong view here, but what are you hearing around, Macron, France, the influence of the next head of the ECB, Germany obviously has a heavy hand. Mr. Weidman, I mean, where do you see this going? Because it's all going to come down in October. The next head of the ECB.
This is a year of huge change. Look, we've got the European elections happening at the end of May. We've got an entire new European Commission coming in November. So, Juncker's retiring. He's going off to a bar in the sky somewhere or wherever he's going to go. And also big change at the ECB. So this is a massive year of change within the European institutions. And it's going to be very interesting. If the ECB decides to be really hardcore in terms of policy and in terms of trying its utmost to maintain discipline within the Eurozone.
You have that 1.8 trillion of Italian bonds in the next 3 years. Yep. So you need an accommodative ECB.
What I'm seeing, and it's fascinating, is despite the uprising that we're seeing amongst public opinion, new political parties, the way Brussels is responding to this is actually to try and centralise even more quickly. So these decisions as to who gets put in as the next Commission President, what direction the ECB is going to take, I personally think that they will not be very accommodating. They will try to maintain discipline. It's rather like the school teacher. If the kids don't respect the school teacher, the more the school teacher shouts at them, the worse they behave. And that's almost what you've got here. So I think they're going to try and play very tough. I think they're going to go I think Brussels will choose very centralising people, quite authoritarian people in economic terms, and that will just keep the discontent going. We're heading for years of conflict in the Eurozone. And we're also seeing, of course, economically, some quite worrying signs. Industrial production figures for Germany, for France, Italy in recession. I don't see any prospect of it coming out of recession in the short term. So, we're now moving into a period of negative economics. And that's why I think the whole populist movement is going to get
But
bigger.
in Italy, you have the tax cuts and the fiscal spending that they want. When does that get put forth? I mean, has that where does that stand? Because you had Salvini ran on tax
I know.
cuts, and
I know.
Five Star ran on deficit spending.
I know.
When does that stimulus come into Italy? where is that?
I don't think they know. I don't think they know. But as I said to you earlier, there seemed to be a popular government because they're seen to be standing up against Brussels. In the end, this European project isn't going to be that. The big difficulty, I mean, it's tough enough for Britain to get out on Brexit. The difficulty is, how do countries leave the Eurozone? And the day somebody puts up a decent plan for how you leave the Eurozone is the day when the whole thing will change. We're not there yet.
Like a 2-euro system where you have a southern euro and a northern euro.
That
would be more fair to the Italians.
That is very much the way that some of the thinkers inside Liga, that's the direction of travel that they're currently
It's
on.
not that they leave the 2 euros.
2
A
euros.
northern euro and a southern.
That's currently the thinking, and I know that within Liga they're having this conversation. Again, exactly how you implement it, exactly how you do it, I don't know. But I mean, ultimately, I have to say this. I know a lot of people have lost a lot of money being short of the euro over the last decade and more, but I think we have now reached the point where I am now pretty bearish.
On the euro itself.
On the euro itself, yeah. And I think Germany faces some big long-term problems. I think the massive changes in the car industry in particular are going to pose some real problems for the German economy in years to come.
So we have these auto tariffs that the U.S. is hanging over the head of, especially the German.
It's a great Trump trick, isn't it? I love tariffs. I mean, it drives them mad.
I mean, you think of what percentage of German GDP comes from the auto industry.
That's right.
It's very high. And then we have this plan that's come from the Commerce Department. It's been delivered to the White House. They've kept it very secret so far. It's been leaked out that it will be more targeted tariffs versus a shotgun. But in other words, they may try to protect Tesla and electric vehicles. Because, I mean, can you imagine this Tesla? You've got 20,000 German engineers that are going to be producing electric vehicles. You've got $300 billion of capital expenditures and investments from Volkswagen and BMW that's coming into the electric vehicle space. But how do they come up? How do they do a deal here with Trump? Because you've got Macron and the French agricultural demands, right? So Trump,
which never go away.
So how does Germany, like I think it's Kissinger once said years ago, he said, the only problem with Europe is I never know who to call.
Yeah.
Right?
Yeah.
Like how does...
I know Kissinger said that. and of course, there were American administrations for years who actually encouraged the creation of a European political project. And one of the reasons, of course, was there were 500,000 American troops, during the Cold War, helping maintain the peace in Europe at a massive cost to America. But all of that 60s and 70s thinking that came from the USA about Europe ultimately proved to be wrong. Because how could you have one foreign minister for Europe? How can you have one finance minister for Europe when you've got these incredibly disparate, not just economies, but cultures? It doesn't work. It just doesn't work.
So how does the White House deal with this Macron in France that won't give German the agricultural concessions that they need, and then the Germans, you have the situation with
I think Trump's got them where he wants them, actually. Trump's got them terrified. I mean, don't forget, 6 months ago, when he first spoke about the iniquity, as he saw it, of the car trade across the Atlantic between the EU and America, and he talked about tariffs. I mean, within 4 or 5 days, they bundled Mr. Juncker onto an aeroplane and sent him to the White House. They are terrified of Trump. They're terrified of this threat of tariffs. And ultimately, I think, agriculture, forget. There's going to be no deal on agriculture of any kind at all.
So if they don't give on agriculture, then then how can the EU and Germany offer Trump something that would satisfy Trump's demands? That's it.
Don't forget, these standoffs can go on for a long time. This doesn't have to be resolved tomorrow. But I mean, the idea in Germany that Trump could impose punitive tariffs on cars, as I say, he's actually got them where he wants them in some ways.
Well, Japan got the joke. I mean, if you look at Japan went through this year. Do you know the percentage of Japanese cars that are made in the United States is close to 70% of the car itself, in the high 60s. Volkswagen's like 18 to 22%.
Yeah.
So Japan got the memo in the 80s and 90s, and now Germany and Volkswagen and BMW are getting the memo. But the cheapness of these European auto companies, BMW is trading at the largest spread discount to General Motors that we've ever seen in a decade. So it feels like to us, the Bear Traps report, that a lot of this is priced in. And if Trump delivers something, if softens up a touch, you could have a substantial mean reversion in the.
Well, he will do, of course, at some. I mean, but isn't that the way that Trump plays? Yeah. Ask for that, but settle for that. And there may be a deal coming, but at the moment, I don't think you're going to see a settlement of this quickly. And I think, and again, we need to make this point very strongly, that everything changes in the European Union this year. The Parliament changes, the Commission changes, the ECB changes. Over the course of this summer, there are going to be no deals done with the European Union. There's going to be no one there.
And 5G. I mean, so Europe has got this 5G weapon. I mean, this is a major weapon because as 5G, the major telecom infrastructure of the world, China wants to have their companies have more control over 5G. Trump needs the Europeans on board with the U.S. platform, and the U.S. and the Europeans have now held back in recent days, saying that they won't stop Huawei and Chinese technology.
I know. Well, in many of these areas, you almost think that some of this European decision-making is just to spite Trump. I mean, Iran being a classic case of where you almost think every pronouncement Trump makes on Iran, the EU say something different. As I say, don't expect much transactional business to take place this year between the European Union and America or anybody else. This is a month after month after month of elections. That's what Europe is going through this year. And we'll know by November. We'll know by November what the shape of those institutions is going to be. I suspect, as I say, that at the centre, they will carry on with their centralising course. But you may see a European Parliament that has such a big minority of Eurosceptics that effectively they can block a lot of new legislation going through. So we could finish up at the end of this year with an EU even more stalemated than it is now.
Let's get into your vision for middle-class Britain and Britain itself for the next, how does your views and your concept actually help the man on the street? And what's your vision for the next 5 years?
Brexit will happen. I don't think it's going to happen this year, but Brexit will happen. Why? Because the genie is out of the bottle. People have made their minds up. And what the negotiating process has shown us is the sheer arrogance of these bureaucrats in Brussels. I mean, people in Britain now hate them. They are real hate figures. So we will be free of this thing at some point in the next 2 or 3 years. What that means is we genuinely become a self-governing nation. We start to make our own laws again, which we haven't done for decades. Now, we could use that opportunity to make things considerably worse for ourselves or make them considerably better for ourselves. But the argument that I'm going to go on making with Brexit is here is our opportunity to look at a section of our economy that no one talks about anymore. The 5.4 million people in Britain who run their own businesses or act as sole traders, who provide over 60% of employment in the private sector, and who are crucial to economic growth and everything else within our economy. And governments in days of capitalism used to help these guys by lifting the burden of regulation off their backs or whatever else it may be. We're not living in capitalism. We're living in an age of global corporatism. We're living in an age where very big companies and very big governments act in concert, and no one frankly gives a damn about everybody else. My vision for Brexit Britain is one where we genuinely, economically liberate these people and let them get out there and try and make their own money. And yet, I know people will say, well, Nigel, the shades of Reaganism, the shades of Thatcherism in what you're saying. But the answer is, it worked. And it worked then, and I think it would work now. And on the world stage, I think Brexit Britain becomes a very different country on the world stage. We've been seriously hemmed in, unable to make our own trade deals, unable really to fulfill our role in the world. And I think logically and obviously, it is the English-speaking peoples of the world, which basically means America and the Commonwealth, who I think and believe are going to get a whole lot closer.
And when do we get that election?
What general election
Yeah.
in the UK? At the moment, it's not in the interest of either party to have a general election. So all the guff you read in the newspapers about an imminent election, none of it's happening. All right, it just is not going to happen. But if the Tory party don't deliver Brexit, what you will then see is a fracture on the centre-right of politics that'll perhaps be even bigger than the fracture we've seen to the centre from Corbyn's Labour Party. So British politics is actually a little bit more fluid than it's been for some time. But I do think...
So an election within 2 years, but not within a year?
I would think very unlikely within a year.
Okay.
Very unlikely within a year. But if we haven't left the EU, there might be a European election. And if that's the case, I should be back in the front lines doing my stuff.
It's a pleasure to have you.
Thank you very much.
Okay.